Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ken Shreve here with a look at the market after the heels of the conclusion of a two-day Fed meeting. And it was a strong day, Ken. We did see a bit of selling into the close, but nonetheless, a strong day all around, it appeared.
Yeah, definitely nice response by the market and what many interpreted as a sort of a dovish Fed Chairman Jay Powell. So we'll talk about what the Fed said. They hiked interest rates again by a quarter point. Two stocks we'll look at today is an ETF, the Materials Select Sector Spider Fund. XLB is the symbol there. Also want to take a look, another huge day for semiconductor stocks. So Applied Materials on our radar, AMAT is the symbol there. And finally, Performance Food Group, not a name that we talk about very much, but great growth and a nice breakout today.
All right, we'll analyze those stocks and ETFs, but first let's take a look at the major indexes today. The NASDAQ finishing with a gain of 2% in the market today. We had the S&P 500 up a little over 1%, the Russell 2000 up 1.4%, and the Dow finishing slightly positive, but reversing higher for the day. But tech continuing to lead in this market uptrend. Ken, we'll also get to some of the after hours movers as well. But the case for this market rally having a longer lasting effect seems to be strengthening almost by the day.
Yeah, very bullish move by the NASDAQ composite here. It doesn't show it yet on the chart, but we are going to get higher volume again on the NASDAQ. So yet another accumulation day. And, we put this market back in a confirmed uptrend all the way back on January 6th. And we've seen, several higher volume gains by the NASDAQ, several subsequent follow-through days, including today. So the price and volume action has been picture perfect. And I think we got a little bit of hawkishness, a little bit of dovishness from the Fed today, but I think the market liked the fact that Jay Powell used the term disinflationary more than once. He's acknowledging that they are starting to see inflation cool, but he also said we still have a lot of work to do to tame inflation. And I think Friday's jobs report is going to be very important. They're on the record saying they want to see some softness in the labor market with the unemployment rate at a 50-year low, I think. So lots in the Fed statement today, but they raised rates as expected, and the market interpreted it as dovish.
Mm-hmm. And yeah, we're seeing continuing positive signs in the market on a technical level here. As you mentioned, a lot of room now between where the NASDAQ is and that 200-day line. So quite a big hurdle there that we're continuing to gain ground on. Also for the S&P 500, seeing more space above that 40-week line and the 200-day line on the daily chart. And now it does look like, as of right now, we are decisively above this 4,100 level.
Yeah, I mean, it really looks like a bona fide breakout today with that move above 4,100. That's a level that we've been watching along with many other technicians, but good volume on the NYSE as well. We had higher volume, good percentage gain. Technicals look very compelling here as well.
That they do. And small caps looking pretty strong, extending gains today after a breakout in yesterday's session. And just a quick look at the Dow as well, reversing higher here today, slightly above that 34,000 level. But Ken, are there any concerns at this point about the strength that we are seeing in the market, especially led by tech here? Are we going to see, I guess the expectation would be a follow-up on this strength, but at the same time, should we be expecting some sort of pullback at some point, or do we have more room to run on the upside in the short term?
Well, that's the $1 million question. I know you had the weekly chart up there for the Nasdaq, and what I see on the Nasdaq is just a really bullish move off lows. 1, 2, 3, 4 up weeks in a row. Another up week taking shape here. So, after what is probably going to be 5 straight weekly gains for the Nasdaq, of course you'd expect a little bit of consolidation. So, markets can pull back in healthy fashion. They can pull back in unhealthy fashion. So. One of the things this rally has going for it is the really lack of distribution that we've seen since January 6th. The number of times that the market has, fallen sharply in higher volume really has not happened that much. So as we get some pullbacks going forward, as long as they can be relatively tame in light volume, doesn't mean that we won't see a higher volume decline and start
Right.
to see some distribution days. But we've really seen not much in the way of institutional selling. So I think tomorrow will be important, but we don't mind pullbacks in the market, especially after such a powerful rally off lows. Even though volume has been pretty strong
Hmm.
on the Nasdaq and leadership has broadened out. We could pull back, but we just want to see a healthy pullback as opposed to
Exactly.
increasing, higher volume declines and distribution days.
Right. But we're continuing to see a change in character in this market. We were wanting to see higher lows. We got it. Now, if the market can keep this up, it really feels like we will start seeing more higher highs. So that by definition is an uptrend. And I just want to take a second to reiterate this market call here by the IBD team on January 6th, which I think underscores why it's so important to focus on the market technicals in the way that we do and not let just the macro or the sentiment cloud too much what we're seeing in the price and volume action, not only in the broad market, but underneath the surface as well, how leading stocks are acting. And even though we did have a couple of failed rally attempts in the 2022 bear market, I think this goes to show that on a follow through day like we saw on January 6th, you have to at the very least dip your toe in the water and not just assume, oh, well, this is another bear market rally. We're for sure going to hit resistance. There's no way that this can work. So you can't just assume that a trend is going to continue. And I think even if you do have failed rally attempts, they're worth at least trying to put money to work in a measured approach and knowing when to back away, which we did in those couple of rally attempts last year.
Yeah, I mean, we've seen our share of failed follow through days in recent months, but we always pay attention when we see one, and we saw a fairly decisive one on January 6th. So our strategy stayed the same. We flipped our switch, turned positive on the market, put it in a confirmed uptrend, and so far so good. Again, the broadening leadership, home builders, retailers, chip stocks, material stocks. I mean, it really is spreading out, and that's good. And I think the market, listen, the market has been growing more comfortable with the notion that we are going to get a soft landing for the economy. I think 6 months ago, Jay Powell was far from convinced that that was a scenario. I think he realizes that it's a distinct possibility. I thought the big drop in the 10-year Treasury yield after the Fed announcement was noteworthy. It was trading around 3.48%, and ended recently trading around 3.4%. So money flowed into bonds again, dropping those yields. I mean, the bond investors think that inflation is going to fall faster than maybe what the Fed thinks. So. Definitely positive sentiment out there, and we're in a confirmed uptrend, so it's a time to be swimming with the market tide here.
Exactly. And now let's take a look at a couple of different sector ETFs. Here's XLE. So, not seeing energy participate with the market rally today, but of course, that was one of the leading sectors by far in 2022. So, it looks like we are seeing a rotation out of energy, Ken, and into tech.
Yeah, I'm not sure energy is a place to be right now. You know, the big drop in crude oil today settled at just over $76 a barrel. It was down about 3%. So you can see oil prices have really struggled, and yeah, just lots of selling in the group today. So just wanted to take a look at XLE and a nice strong update for the market. Energy stocks did not participate.
Notable for sure. And let's also take a look at SMH. We had earnings out from AMD, for example, today. So a big day of outperformance for chip names here, Ken. SMH up 4.7%. So some big market outperformance here. And it's really great to see chips not only participating in this market rally, but seemingly leading.
Yeah, we added this to leaderboard a couple of weeks ago, thereabouts, when it when it came down to its 21-day moving average. So that was a good entry, and yeah, just a super strong move today. The move in advanced micro devices, they're still talking about strength in their data center business, and you really see a nice decisive move above the 200-day moving average for AMD. So boy, the leadership in chip stocks. We have Impinj PI, which is reporting next week. That's been a nice one on leaderboard. That hit a new high today with some volume. So really, the outperformance of chip stocks is a big reason why the Nasdaq continues to outperform here.
Also, we want to look at IYT, the transportation ETF, up 2.3% today. We got earnings from ODFL, so a lot of trucking names on the move here today as well.
Yeah, I think IYT, if you're looking for some ETF exposure, this does not look too stretched to me. You can see it recently came down. All its moving averages are kind of converged here, but came down to the 200-day moving average, found support, and crossed a pivot today with some decent volume. And you mentioned the trucking stocks doing very well. ODFL had a big gap up on earnings, so transport's good to see. Just like you want to see the chip stocks, leading when the Nasdaq is outperforming. It's good to see these transports outperforming as well. It sort of strengthens the argument that we could indeed get a soft landing for the economy as opposed to kind of a long, drawn-out, painful recession.
Right. Yeah. Seeing everything swim in the same direction. Energy, as we mentioned, an area of weakness here, and we're seeing some rotation. But great to see transportation participate in today's rally as well. Now let's focus on XLB, the materials ETF, extending gains after breaking out in Tuesday's session, up 0.7% here today, Ken. So not extended, as you were mentioning, for some other areas of the market. So what do you think about adding exposure here? Didn't quite keep pace with the broad market gains, but it has been moving higher this year.
Yeah, it has been moving higher. And you look at the daily chart, you've got some up days in up in the volume bars, some up days in expanding volume. So that just tells you that it is under some accumulation here. So materials, top holdings in this ETF are Nucor, NUE, and also Freeport McMoran. So it just seems to, Nucor is a strong performer. And you can see Freeport here holding gains after that nice breakout over 40. So XLB looks strong here, and we actually added it to leaderboard today. So still in a buy zone here, and just again an example of it just good, solid, expanding leadership in this market.
Yeah, and we mentioned earlier the strength in chip stocks. So let's take a look at Applied Materials AMAT here with a breakout today, up almost 7% in expanding volume in this bottoming phase. So great to see this additional chip stock semi-equipment maker participate today. I know Lam Research was another name that we looked at. A lot of strength in semis.
It's throughout the semiconductor sector, the chip makers, the chip designers, the chip equipment firms like Applied Materials. So here's another just example of a good crisp breakout. You didn't get a whole lot of volume that rolled into the stock today, only about 10% above average, but this was a nice move above last week's high. Look at that conventional pivot 116.09, still in that 5% buy zone. So makes sense to have some exposure to chip stocks here. here, and this one, still in the 5% buy zone, and just seeing a lot of great looking setups in the chip group.
Yes, we are. And last but not least, let's take a look at PFGC, which is still in buy range. Food stock, but with really strong growth here that we are seeing an upside reversal on the chart in Tuesday's session and a breakout here today. Didn't quite see that above average volume in today's session. We've got earnings in a week as well, but let's take a look at a weekly chart here and we can see that strong growth last quarter. Earnings up 151%. Strong top line growth as well, Ken.
Yeah, they made an acquisition in the second half of 2021. They acquired Coram, and so you're still seeing this acquisition kind of pay off in terms of strong recent bottom line and top line growth. Performance Food Group is a food distributor. They bought Coram, which distributes food to convenience stores. So that's a new area for PFGC. But this is just a great example of what a good tight flat base looks like. After a breakout over the 50 level, it kind of moved sideways, showed a lot of tight weekly closes right at its 10-week moving average, and then a bona fide breakout today. So again, people looking to put some money to work here, maybe diversify beyond tech. This is a stock that's acting very well and a good solid breakout today.
Great. All right. Well, before we wrap, I guess just a quick discussion, Ken, on how investors should be positioned right now, because we could be getting more strength. Hopefully, investors, since that January 6th follow through day, have been starting to put money to work on the 6th and accumulating thereafter. We've had a couple of pullbacks in the market along the way and a breakout last week for a lot of the indexes and gains extending this week. Also before we close, I do want to check in on Meta because this is going to really be the big story tomorrow. Ken, Meta up 18% right now after hours announcing, I believe, a $40 billion stock buyback program. They're slashing their spending, and earnings did miss, but there was a revenue beat here. But for this mega cap tech stock, if it can hold on to this gain tomorrow, seems like we could have another big day in the market.
I'll tell you what, and to see an earnings reaction like this with the stock up 18%, we've got Amazon, Google, and Amazon, Alphabet, and Apple reporting tomorrow after the close. So hopefully we'll get a similar response to those three companies tomorrow. But Facebook or Meta Platforms, just a tremendous response to earnings, and you highlighted all the good news that they reported. So haven't really dove into the earnings report yet, but to see the stock up 18% makes me feel good about maybe a decent open tomorrow too for the market.
All right. Well, for all the latest, make sure you tune in tomorrow morning to IBD Live, investors.com/IBD Live for all the details, where we will make sure to keep you up to date on overall market conditions, portfolio management strategies, stocks to watch and potentially buy, and so much more. Looking forward to interacting with everyone in the morning, starting at 10 minutes before the opening bell and running through the first hour and a half of trade. So we will see you then, and we'll see you right back here tomorrow for more big tech earnings reactions. We'll see you then.